Here's your Forbes Daily Briefing for Monday, March 4th. Today on Forbes, why Bitcoin's surge could be a boon or trap for new Ether ETFs. Spring has come early to crypto land. Bitcoin is trading above $60,000, up more than 167% in the last 12 months, and more than $7 billion has poured into the new Bitcoin ETFs. ETFs are exchange-traded funds. The market is buzzing with anticipation for an ETF backed by Bitcoin's little brother, Ether, the native token associated with the Ethereum blockchain and used to create such things as NFTs. Ether has a market cap of more than $400 billion, second only to Bitcoin, whose market cap exceeds $1.2 trillion. In May, the U.S. Securities and Exchange Commission, or SEC, will likely pass final judgment on 9 spot Ether ETF applications. But unlike Bitcoin's decision day in early January, which seemed to be a fait accompli, Ether's outlook is far less certain. The most immediate concern is whether the SEC believes that Ether is a security, which means that it would be subject to registration and regulatory oversight by the SEC under the Investment Company Act of 1940. Most ETFs, like the QQQ or the SPDR S&P 500 Trust, fall under the so-called 40 Act precisely because they are bundles of stocks or registered securities. Despite the fact that cryptocurrencies seem to trade and behave much like any number of stocks in the market, the digital asset community believes that the thousands of different cryptocurrencies behind the $1.8 trillion industry are not securities. In fact, they bristle at the thought, calling it anathema to the decentralized ethos that launched Bitcoin 15 years ago. To some extent, these beliefs were vindicated when the SEC greenlit spot Bitcoin ETFs in January after a 10-plus-year wait under the 1933 Securities Exchange Act, which recognized the underlying Bitcoin in these funds as commodities. So far, the SEC has avoided addressing the issue of whether Ether is a security, although it has alleged in its June 2023 case against Coinbase that numerous tokens, including those associated with blockchains Cardano and Solana, which are essentially clones of Ethereum, are in fact securities. SEC Chairman Gary Gensler has been conspicuously mum about Ether's status. If the SEC decides that Ether is a security, it will insist on ETF issuers treating it as such in their applications for approval. While this might seem like just a bunch of legal paperwork, doing so would be an affront to crypto industry insiders and idealists, and would throw into question the status of thousands of cryptocurrencies. However, given the potential billions at stake for early movers in the new booming market for crypto ETFs, those that can gain market share as rapidly as BlackRock, Invesco, and Fidelity have with their Bitcoin ETFs could benefit from such an SEC ruling. When it comes to asset gathering and profits, the so-called, quote, crypto community ideals aren't likely to carry much weight. After Bitcoin, Ethereum, which was created by Vitalik Buterin and others in 2015, is the second most important blockchain in the world. It is distinguished from Bitcoin in that it allows developers the freedom to create myriad applications, often called smart contracts, running over it. Its success is critical to a giant ecosystem of companies ranging from Nike and Circle to Uniswap and Blur, involved in businesses ranging from payments to decentralized finance and gaming to NFT applications. The price of Ether, known widely as ETH, has doubled in the past 12 months. Ethereum's origin story is significantly different from Bitcoin's, and that is of keen interest to the lawyers at the Securities and Exchange Commission. Ethereum conducted a crowd sale in the form of an initial coin offering in mid-2014 and reserved a portion of the 72 million Ether created at launch for the founding team led by Buterin. In many ways, ETH's initial coin offering was similar to how founders in a company issue stock in an initial public offering. One of the measures determining whether something is a security has to do with centralized control, and during the early days of Ethereum, its peer-to-peer network was controlled by a small group of developers. Over time, however, Ethereum and its governance have become more decentralized. For full coverage, check out Stephen Ehrlich's piece on forbes.com. This is Kieran Meadows from Forbes. Thanks for tuning in.